Before we get started, though, we do need to let you know that unique experiences and past performances do not guarantee future results. I think everyone here on the call understands that. We're all adults. We know that trading involves risk. But I do need to pause for just a second, give you an opportunity to read through that, and then we will get started with our trading day. All right, that should be long enough. All righty, so what's going on in the market? We had some news this morning. It caused some moves for us. We're not going to be too concerned about that just yet. We'll probably get to it here in a bit as we move through the different pieces of our daily regimen. So everyone should have open a couple of things. You should have open your trading terminal, which is here. That's probably number one. Number two, we need to should have our members area open. From our members area, we can get our daily trading regimen, which looks like this. So that's available on the download section. It's available under the schedule section, a couple of different places. So be sure to pick that up and have a copy of that. That's what we'll be working through today. Then you'll need your daily report as well from Forex Joe, which is also found in your members area. Just simply go to the menu bar, Forex Alerts, and then the daily report. And from there, you'll have all that information. So a couple of key items we need to have open, and then we can get started. Let's kick it off with the Euro USD. Looks like it's hit some highs yesterday and is now moving back down a bit. Current price is at 37.56. And let's go ahead and capture our channel information just to get things rolling here. So over to the daily report. Oh, that's bothering me having that window open. All right, over to the daily report. What do we have? Well, we know we have a channel top at 38.31, and we have a channel bottom at 37.62 right here. So we've got a top at 38.31, a bottom at 37.62. What are our support and resistance levels? Next question on our checklist here. So currently trading at 37.56. So we've got support down below us at 37.40, and then if we break through that, 36.95. On the upside, we have 37.75, and then above that, 38.09. All right, are we trending or oscillating so far for the day on this currency pair? And looks like we're in a bit of a downward trend right now, but we haven't moved a whole lot. But let's just, for what it is, looks like we're trending down so far for the session. But the big question here is, has the channel been broken? Have we broken above 38.31 or below 37.62? And the answer there is, well, yes. We actually have. We just broke below and closed below 37.62. So yes, we have broken that channel. What's our average range? Well, today we've moved 53 pips, and our average range typically is real. Right now it's really kind of compressed a bit from what it would normally. We'd normally expect about 100 pips out of this pair, but right now it's moving about 70 pips on average for the range. So call it 70 to 80 pips. Knowing, excuse me, a little bit congested, knowing that we could move about 100 there. Next question on our checklist is news. Is there any news coming up? And we like to use Forex Factory for that. You can use any news source. You could use, FX Street or Bloomberg or, whichever one you choose. But it's just important to know what news is coming up. And we do have some additional news, lower impact, medium impact stuff. 10 o'clock business inventories, 10:30 natural gas. We had the big news earlier showing retail sales were up slightly. Unemployment claims, though, were way up, so that's bad news for us. But we got kind of a mixed report there from the news, and I'm sure Forex Joe will talk a little bit about that here in a bit to give us some direction of what we might be in store for the remainder of the month and maybe even into 2014. So, but the important thing for us right now is to know if there's any new news coming up that could be a potential pitfall for us. We see no, there's no news there. And the last thing that we'll have a look at is the futures market. And here we like to see kind of where is the dollar leaning. Are we leaning towards a strong dollar or a weak dollar? Right now, we're kind of in a mixed situation again, just kind of a level. Not really any direction one way or the other. Kind of what we've been seeing over the past week or so. U.S. dollar and the Dow. Dow is up slightly, dollar is up slightly. That's a sign to be cautious, be careful, and maybe even stay away right now. But so that is a bit of a sign. We do see gold and silver down, but Dow and crude are up. So again, just a mixed bag. There's no real direction one way or the other right now. So with that said, let's go ahead and see what we can find. We've gathered all of our data, and now we can pop over to our chart and see what levels we might like to trade off of. So obviously, let's go ahead and put these channels in. We have our channel bottom at 3762, so let's go ahead and put that one in. That's right here, channel bottom. And we have a channel top at 3831, which is right up here. Oh, this must be an order I still have on from the other day. I thought I closed all those out. I'll have to take care of that in a second. All right. So 3831, right up here. And then we also have 3740 as a support level for us. Move my GoToMeeting toolbar. Oops. What did I just grab? Nothing. Get my GoToMeeting toolbar out of the way here so I can see. All right. And we've got 3740 right down here. All right. And if we break below that, 3695, so that 3700 area would be big for us, which is right down here. All right. And then to the upside, we have 3775. Okay, so where do we want to trade from, though? What are we going to do? Well, we're trending along. We have our Asia low here, kind of right here at this 3775 area. It was pretty well respected, and then here during the U.S. session, we've just broken down and kind of broken through all of these with no real retracement. I'd be looking at two levels for this to come back to. I mean, definitely the trend looks like the stronger dollar for the day, but the big caveat there is what I just mentioned with this futures market being mixed. This is a scary thing when we see these two together. One's going to pop. Either the Dow's going to break loose and rally back towards that 16,000 range, which will bring the dollar to some weakness, or it'll continue down and continue the dollar strength. So and I know which is it, but we don't really know. So we have to look at trades on both sides if we don't have an idea. Dan, on my broker, that's just some additional. I mean, every broker is going to have a different definition. This is an ECN broker, so they have ECN at the back. They may offer a different service for the fixed spread, and it may have a different suffix on this. So it doesn't really mean anything to us one way or the other when we're looking for trades. So as far as where to trade from, I'm going to look to park a sell up here. I'm going to go a little higher than this 3762. I'm actually going to go back here to this Asia low, and I'm going to look to sell on a retest of that Asia low. And I'll take profit pretty quickly. I'm going to look to take profit right down here. If I can never select mine. I'm having all kinds of problems this morning. I'm congested. My mouse isn't working. all kinds of stuff going on. All right. So we're gonna take profit pretty quickly. I'm gonna look to take profit right here at this next support level down, and then just slightly beyond it. I don't foresee anything really stretching its legs today here on this Euro USD. So I'm going to keep my risk pretty tight, and I'll also keep my take profit pretty quick as well. So we're going to keep those about 1-to-1. So we're looking for this to maybe pull back to this to this Asia low here and look to sell off of the Asia low, keeping our stop loss about 11 pips and looking to take profit at about 10 pips here, 10, 11 pips. So we'll sell that one. So we'll look to do that. Right now, and this is current, so we may have to adjust as the trading day goes on. But right now, under current conditions, it looks like we're in a bit of a downward trend, so a strengthening of the U.S. dollar. So if this occurs, where would we place our sell? And if we look top to bottom here, if we do pull down to this 3,700 area, that would be a great spot to look for a reversal for two reasons. 36.95 is a support level for us. Secondly, if we're going from the high to the potential low, that's a run of about 100 pips. So if we look at that, versus what the euro normally does, which is about 100 pips before we got into this very range-bound market, if it stretched that far, great spot to look for a potential reversal. So I'm going to go ahead and park a buy order down here. Damn it. All over the place with my clicking today. I'm going to park it right here at 3,700. So I know 36.95 is our support level. What I'm going to do is actually hide my stop just slightly behind that. But I'm going to keep my entry actually at that whole number at 3,700, with a big psychological number. And then again, I'm going to take profit quickly. I'm not going to look for that to make any massive run for us. Just looking to see if we can get a bounce. I mean, obviously, if we push that far, it's going to have a lot of momentum behind it. So I'm not interested in just letting it go for a long period. All right, so there's what I'm going to do. So I'm going to park a buy down here at 3,700. So we've got support resistance. It's a psychological level, and it's also end of a range if we do push that low. And on the flip side, I am selling off of 37.75, a retest of that area, and that's a retest of Asia low, and it's a support resistance level for us. All right, so those are the trades I'm putting on for the euro, and we'll see how that plays out for us. Let's move to the pound U.S. dollar. We'll do it again. So we always use the same process over and over and over, and it's just repetition, guys. This daily trading regimen provides the checklist, provides us with a way to gather all of the data up front before we place a trade, number one. Number two, it keeps our fingers off the button so that we're not tempted to make rash emotional decisions because we see a big candle or a big move. And then it provides us that consistent method of always entering the market. So we go through this during our morning calls. We go through it 3 times. We do it start with the Euro USD, and we talk quite a bit as we go through it. The pound USD, we'll do it a little bit faster, and then we'll pick a third pair, either the Aussie or the US yen, and we'll go faster still, just to show. You can really do this if you're trading 2 or 3 pairs. You should be able to walk through the exercise for all of the currency pairs you're trading in about 15 minutes. If you're by yourself, you're not talking to yourself or your cat or whatever about what you're doing, it's all good. You can do it pretty quickly and set yourself up for the trading day. And then, of course, the software, once we have our trades on, manages it for us. So, we've got our software here. Once we put these trades on, we know what our maximum risk is going into it. The minute our take profit is hit, it takes that risk off the table and moves our stop loss to break even +1 and keeps us profitable in that trade. So it's a great little piece that allows us to go do other things, go eat some breakfast, tear ourselves away from the monitor to spend some time with family, whatever it might be. So it's a really cool way to trade. So let's do this one more time. The pound USD, GBP USD, current price is 63.58. And what's our channel information telling us? Well, let's have a look and see. I have an old 19-year-old cat that often sits in my lap while I'm doing these calls, and I swear Sometimes he purrs so loud that I swear it's coming through the microphone. He's my trading companion. All right, you need to have a trading buddy, right? My cat's my trading buddy, keeps me honest. All right, so channel information, daily. What we're looking at, we always start off right here. We're looking down here for our compressed channel, our daily channel, short-term channel. We have a channel top at 64.15 and a channel bottom at 62.96. All right, support resistance levels. Well, we're at 63.58. So what's that tell us? We've got 63.37 as support below us, and then 62.96. So that number lines up with that channel bottom. That'll be a significant number for us. Taking into consideration, it's right near a whole number of 6,300 that even makes it more significant. So that's 62.96, big number for us. To the upside, we have 63.89, and then we have 63.97. So that's 6,400 area again. Are we trending or oscillating for the day on this one? Looks like we're oscillating, right? We right back where we started from. Has the channel been broken, though? That's the big question. Have we broken above 64.15 or below 62.96? And the answer there is no. We came right to 64.15 and repelled off of it. In fact, we bumped into it twice and then repelled. So that was a big number for us. Average daily range. Well, today we've moved 66 pips. Average range in this pair is about 80. Really into a normalized market this year, it's been right around 100 to 110. It's been a little bit greater than the euro, which is odd because last year, it never moved as much as the euro did. But this year, it's been a little bit different. It's been the bigger mover of those pairs. We know they don't have any news coming up, and we're not going to have seen much change in the futures market just yet. Do keep an eye on it, though. Most of your this is all electronic trading. You've still got the, even though it's getting less and less every year, you do still have your floor traders, your open outcry that begins here in about 15 minutes. And, we'll see if there's any kind of a market directional change with where the lean might be after the big guys come in. All right. So we've gathered a bunch of information. We've got our channel information, our support resistance levels. Let's see how those line up on here. Well, we know we have 64.15. That's been a big number for us. We can see that. That's been a big number. Next here, we have, what do we have? 62.96, which is right down here. So we have a channel top. And we have a channel bottom right about there. And that also coincides with the support level in our case, since it's below us. And just marking this up again, we've also got 63.37, which is right through here. Am I moving? There it is, 63.37 right there, and then to the upside, 63.89. All right, cool. All righty, so we've got some info on here. We've gathered our data. We've got some lines on the chart, and now we can figure out where do we want to place some trades. What do we want to go for? Now, this is an interesting thing. We haven't broken out of even the Asia range, which is always a little bit concerning to me. Always makes me start thinking of potential reversals at that point. But what I'm going to do, knowing that for London, we're kind of trending down, but we haven't been broken through this Asia low yet. So what are we going to look for here? Well, we can pull back. We had this level here set up to 63.89, 63.90. We broke through it, came back, and we kind of sat in this range. We haven't retested this support area yet. So, once we have a level of support and it's broken, it becomes resistance. And we haven't retested this level yet. So what I would do is I would look to sell off of here. So if we can retrace back to this level, we'll look to park a sell there and just keep our wrist pretty tight. So 63.90, 63.89, we're going to park at a sell, and then I will look to take profit pretty quickly. All right, and then take profit 2. We'll stretch it down just a little bit right through here. All right, so I have that sell on right now. Okay, and then as far as buys, where are we going to look for a buy? If this is pulling down, if it's really pushing down, getting some momentum behind it, to go to the downside, where are we going to look? Well, we know we have our channel bottom down here at 62.96. Don't know how far is that from. It's 119 pips. Don't know if it's got legs to get there. If it does push that far, great spot to look for a buy. And remember, we need to be conservative. Oops. Why is that? Oh, that's my entry. All right, let's do this. Okay. All right, so if we can push down here, we'll look to buy it off of this level. Why? Well, one, it's a support resistance level that is a channel bottom. So it's a channel bottom and a support resistance level, and it's just beyond a whole number. So that's significant. That's big right there. If we could push to that level, even though it would be counter trend, we would expect to see a bounce from that area. So does it mean it always will? No, absolutely not. There's no absolutes in trading. That's why we trade with stop losses, and we always work to control our risk, because there's no absolutes. We're going to have losses. We're going to have times when it just blows through a key level and never looks back and leaves us scratching our head. We're going to have times when news comes out and it's highly positive for the dollar, but the dollar weakens. There's always going to be those things that are against, kind of the probability, and that's why we trade with stops. Then we look to take our profits quickly. So, we just have to be aware that there's no absolutes, and manage our risk appropriately. So if it can push there, though, great, and that's a great spot to look for potential reversals. And we're parking that buy again. Just put it in. I'm always making a note here at the bottom so we know what we did and why we did it. So we're parking a buy at 62.96. Why? It's a channel bottom. It's a support resistance level, and it's near a whole number, end of a range. And if that isn't a great spot to look for a buy, I don't know what is. Sell. We have our sell up here, 63.89, and we're looking to sell off of that. It is a support resistance level in this case, and it was an area that was set up with some decent respect that has not been retested yet. So looking for a retest there. All right. So each one I'm filling out exactly what we're saying, and I make notes on the page about what we've just done, so that if I ever need to come back to it, I've got a trading journal there, and I know what I did and why I did it if I'm asked. All right. So final one. Let's do it one more time. Do it on the U.S. yen. All right. So here on the U.S. yen. Current price, 102.99, 103. This is trading at a big level. We could probably enter a market order on that one, but let's gather our data real quick and just see what we've got. Channel information. Channel information is telling us that we have a channel bottom, 102.68. And we have a channel top, 102.68, and a channel bottom at 101.92. Support and resistance levels, well, we've already broken through that top, so what do we have here? Well, we have 102.93, kind of a decision point for us, 102.60 down below us, 102.51 down below that, and to the upside, 103.38, and then 103.72. Trending or oscillating for the day on this one? I think we'd all agree we're in an upward trend. Has the channel been broken? Have we broken above 102.68 or below 101.92? The answer there is yes, we have broken the channel. What's our average range? Well, today we've moved 57 pips, and average range on this is about 70. It's really closer to 80 to 90, but we'll call it 70 pips on that one. We know that there is no more news coming up, and the futures market won't have changed too much, although it might here in the next couple of minutes. So I want to keep an eye out on what happens there and how we how our market makers might choose to move things around for us. So with that said, what do we want to trade? You guys have noticed today that there haven't been many 2 of 3 channels, or even 3 of 3 channels in what we're looking at. It's kind of odd. All right, so what are we going to trade here? Well, let's just put our channels on real quickly. 102.68 right down here, channel top. 102.93, bit of a decision point for us near where we're trading. That's right up here. Let me get my alrighty, 102.93 and 103.38 right up here. We actually got a red thermal grid right below it at 103.33. So 103.38 is kind of the top of that grid. If you guys are, you don't need to have thermal grids. I mean, you can trade with a clean chart and put the lines on like we're doing using the daily reports. But with your service, you do have access to the thermal grid template. So just go to FTT pending order. That'll have the thermal grids on there. All right. So what are we going to place here? Well, first things first. We're at 60 pips right now. If we push to 103.33, I'm going to look to sell it off of that. Get these out of the way. Okay. So same thing we did before. We're just looking for, where are the areas that we would potentially see this going that we could look to park the sell. Well, end of a range, great spot to look for reversal. I mean, it's counter trend, so it makes a lot of people antsy. But reality is, currencies don't just simply go straight in one direction. They're going to come to a spot and they're going to turn around. Now we know, we're looking at our average range, that typically, the average range over the last 130 days has been about 67.8 pips, 70 pips. If it goes 80 pips, it's pretty much through what its normal range would be. So great spot to look for a reversal. Does that mean it can't go beyond it? Well, no, obviously it could, but you've got a higher probability of it turning around if it does get there. And we're just looking to get a few pips on that reversal. We're not looking to stretch it out. I mean, if it does hit there and turn around, great, excellent, good for us. If it just gets there, bounces down, gets us into take profit one, and comes back up, that's fine too. Profits are profits. We're happy to take them. All right. Next up, this 103. It's going to be a tough level for us. Where are we going to trade off of? Are we going to look to keep buying it over here at 102.93? That's tough. Part of me says yes. I mean, I know it's a quick trade, and I don't normally take those really fast trades here in class, but 103, I mean, it's really knocking at that door, and I have a feeling we're going to have a chance to move through it here shortly. We certainly don't want to have a 30-pip stop loss, though. All right, so I'll go ahead, and I'm going to move to buy and sell. Since we've got them both set up, we'll take both those trades. All right, so we've got those trades on. So again, we're buying this 102.90 area. We're buying this. It's a 102.93 actually, which is a support level for us. It's also been highly respected. We saw it come to this. It set this up as a top during Asia, and it broke through it, coming back to retest it. So it's also retested the Asia high. And then we've got 103.33 for a sell, and we're looking at that because it's the end of a range and it's a key level. All right. So those are the trades I'm going to put on. That's what we've got. We'll let the system manage it for us from here. And I'll go ahead and turn it over to Forex Joe, and we can see if you guys have any questions that we can answer. Right, Forex Joe, you on?
I'm here, Brian. Okay, I'm going to change presenters because I want to show everyone my... Stand by here just a second.
Yep. We see the daily report.
Okay, good. All right, we had some questions come in, so I want to go over some of those questions from some of you, and let me, I need a drawing tool here, no, a highlighter. That's what I need, is a highlighter. Okay, bear with me for just a second here. I'm moving some stuff around. There was some questions about, like, when the euro is like range bound, like we're seeing now, being patient for swing trades. So let's kind of take a look at what's going on here. Okay, when the session opened, we were at 37.84 for the euro. I see that we've just broken above 3,800, 4 or 5 pips. It reversed down to 37.50. We're currently right around the 37.60 range. So basically, we're in about a 55 pip range for the day. Now, when you go down and you take a look at what's happening here, you can see that over the last 4 sessions, overall, we've only moved 69, 62, 52, and 86. Now, we've had 7 straight blue sessions, which we've talked about. So it's been a consistent moving up area, but when you take a look at the last 4 sessions, and this will actually be the 5th session, we really could just have one major move here to where you could see something like this, 134 pips, and all of a sudden it drops down 70 or 80 pips. Or you could have over here 162 pips and it moves down 106 pips, where it would wipe out about 2 or 3 days of this. And this is something that I want to share with everyone, is that we're looking at the 38.27, 38.15 area as a top. For the rest of this week and going into Sunday night, I would continue that anytime this pair goes above 3,800 to the 38.10 or 15 range in reverse, that you should play 37.99. Just make that an automatic. Now, getting back to the question that was sent in about what needs to happen if we find ourselves, okay, hold on a second, I'm trying to do 2 things here at once. Find ourselves in a situation where the euro is not moving as much as we're anticipating and we're trying to get swing trades. Well, then you're going to have to look at other pairs and other areas. Now, what's been moving of late has been the yen crosses. So as you get the yen crosses, you know, hold on a second, I'm going to go all the way down to the bottom of the report so we can get to this, is that you can take a look at the 24-hour daily chart, and you can see that yesterday you're looking at some of these yen crosses, like the Aussie yen 148 pips, the pound yen 181 pips. The euro yen only moved 77 yesterday, but then you've got the New Zealand dollar 111, Aussie dollar 106, and these are commodity currencies. You also had the pound 119. Then you get down here and you see the pound Aussie, the euro Aussie, and the pound Canadian. So there are pairs that you can pick. Now, if you're not that experienced, I would suggest that you pick 1 or 2 pairs. One of the 3 would be the euro yen, the pound yen, or the Aussie yen. And then pick one of these down here, whether it's the euro Aussie, pound CAD, one of these pairs, to where you can start testing any practice regimen account and have more volatility. We know that the pound yen is going to have more volatility than any pair out there. That's the one that moves, that usually scares the bejeebers out of people if they are very emotional and they're not having their emotions under control and they're not really paying attention to the psychology of trading. Now, I've written an article talking about that we're going to be sending out in the newsletter here later on today or tomorrow, and I would suggest that everybody reads it when it gets out in the newsletter, discussing this fact about the importance of the mindset, and we're kind of want to reiterate that as we get towards the end of the month here. So basically what we're looking at is that when you get into a situation where you have these pairs that are oscillating into certain areas and it is below 100 pips, then you get a really good chance of playing these range bound that we usually get during the summertime blues. You guys have all been trained in that capacity. Now let's take a look at the other part of the equation, the other far extreme. Those of you that are looking for action, those of you that are wanting to have movements and are looking for swing trades, look no further than the pound yen. Look what's happened here for just the last 5 sessions. 181 overall pips, 138, 160, 223, 189. Well, if you're looking for movement, this is your pair. The issue then becomes that you are in a situation where you're not prepared for this movement because you're trying to do it with a 15 or 20 pip stop loss. Once you read the article, you can lower your risk and have a bigger stop loss and be able to make pips in movers like this. In fact, you can go back and you can see the previous 10 sessions, previous 11 sessions. It's been 11 sessions since this pair has been under 100 pips. So now you have a situation, we've talked about this before, where you have the 4 majors that may or may not be moving in a 100 pip range, but then you can always have an alternative. When you take a look at the euro-yen, a euro-yen is another good pair. A lot of you like to trade euro-yen. You take a look at the last 3 pairs, it's kind of slowed down, looking for a sense of direction. 77 pips, 89.98, but before that we had 4 straight 100-plus pips, and then we had the 207 here last Friday after all the news events from Thursday and Friday. Of course, we were talking about the Bank of England, the ECB, and then non-farm payroll. It is critical that you understand that when certain pairs that you are trading are not doing what you want, depending on your trading style, then you can look to cross currencies. This is why we cover 22 pairs. And if you want to expand your horizon, or if you want to have growth, it is imperative that you start testing using a practice regimen account some of these other pairs. And this is something we've talked about throughout the years. And I just want to reiterate that, and this was a great question from somebody that just started here in the last 4 or 5 months. We have many videos talking about this and enhancements of what it takes. Just understand that if you're going to play the pound yen, it's the most volatile pair out there. And if you're trying to play a small stop loss with the pound yen, in some instances, unless you get the exact moment you're going to get stopped out, you have to give it a little room to breathe. To do that, you have to lower your risk to where, you might not be playing 3 lots, you might be playing 0.3 lots. Okay, but instead of having a 15 pip stop loss, you might have a 45 pip stop loss, or hiding behind the thermal grids or the main numbers that we have in the software daily with what's taking place. Now, there was a couple other questions that people were talking about. When do I think that the euro is going to break out? Well, once again, if we go back up here to the euro has been breaking out. The euro has just been slow moving, kind of like the U.S. CAD. We've been touting the U.S. CAD now for the last 3 months, and we all know that the U.S. CAD has been a slow mover, and I'll come back to it here momentarily, but the U.S. CAD's pushing back above to the 0600 area. Now, the U.S. CAD's going to go to a certain direction. I'll be talking more about that in a roundtable report, and then I think I'm going to be talking to Brian. Instead of having a year-end report this year in the holidays, because we have Christmas on a Wednesday, which is the 25th, then we have a New Year's, which will be the 1st, then we have non-farm payroll on the 3rd. What I'll probably do is gather all the information for the year, and then we'll have a year-end report the first week after, and we'll invite everybody, not besides everybody here, but the masses, we'll have it that following week after non-farm payroll. And this will where we'll take a look at what transpired in 2013, what's getting ready to happen in 2014. If you are a roundtable member, I will be sending that information out to you early next week. There are 3 pairs that if you are a swing position trader as a roundtable member, you need to go ahead and prepare right now for here in 2014. There's 3 areas and 3 numbers. In fact, I've given you probably, if you're a roundtable member, you probably know what 2 of the 3 is already. But when you're looking at these currency pairs and you get a situation where now we have this, and this is going to be the fifth consecutive session where it's going to be under 100 pips. And actually, if you take a look at this entire month, we've only had 2 days in the last 20 sessions. And now this will be 2 of 21 where we've reached 100 pips. So basically, the question out there now would be, is the euro dollar turning into what the US yen was before the yen started moving the latter part of November and December last year? And then what transpired to where we had the major moves from 79.50.80 area all the way up to 103. And we all know what that journey has been. We had a blessed year in the fact that we had that major mover, a trender in the US yen. And then we had a situation where after the trender with the U.S. yen, we had the euro dollar that was range bound that allowed us to learn how to trade with the rules of engagement that if we're range bound trading, we're going to know that we're going to be wrong once, but we may pick up 4, 5, 6, 7, 8 to 1 returns before that happens. So we're seeing a slowdown. The euro is going to pick up, okay? But under current market conditions, unless we get something very drastic, 3,800 to the 3,827 and even 3,854, those are the major numbers. If it goes above 3,854 here for the rest of this week, going into next week, I'd be highly surprised. So we've had a situation where we've been above 3,800 twice. You see the 3,809 here yesterday. We closed at 3,784. We went above 3,800 today. It's currently right around the 3,760 last time I took a look. So that's twice now. It's went above 3,800 and it's bounced. And when you start seeing these numbers, we've seen a progression to where it's been 7 straight areas or 7 straight blue sessions. But that brings into account now that we're going to start maybe taking a look at some profit taking. So be careful, but be cognizant and set your alarms at any time it gets above 3,800 to take a look where you're at and where it's at in the session. Which session is it? Is it in the Asian session, London session, and the U.S. session? Is it towards the end of the day to where you might just get ready for the next report and then be prepared? So that's number one. Number two, let's go down here to this Canadian. This Canadian, what's interesting is when you see the Canadian, I'm at the U.S. yen, here it is, we see that we've actually went up to the 0705 area. And we had a number. What was our number? 0712. See this bias number right here? 0712 when we went to within 5 pips of that. We bounced off that number, folks. And look what transpired. We went all the way from the time that we've hit this 0705 area, which was right here on Wednesday 12/4. Then we hit it again on Friday 12/5. We bounced the 2 times that we came off that number. And we've been as low as, there's 0623. And today's low was right around 0630. So right now you're in a range of 0623 to 0630 to 074, 075 area. That's not much of a range. But when you start seeing how this has been progressing, this is a great pair if you have issues with being patient. If you have issues with emotion, self-doubt, and fear, the U.S. Canadian has become what the U.S. yen was up until a year ago. It was a pair that didn't move, usually stayed below 100 pips. It gave you an opportunity to get in. You had your positioning to where it was closer. It was compressed, compact the channel. Get in and get out the door, and it gave you confidence on trading it. If you're still having issues emotionally, I would ask that each and every one of you trade this pair on a consistent basis daily in a practice regimen account until you start to overcome those phobias, and continue to watch the videos and rehash the videos, because we've asked everybody. You've got 2014 that's going to be here in about 2 weeks. It's time to start setting your goals for 2014, what you want to accomplish. Okay, that's the bottom line. So there was another question that was asking about the Aussie dollar. Let's go down here to the Aussie dollar. The Aussie dollar, because I've written something about this low above the 89.88 area to watch the bounce. I truly believe that it's going to be capped around this 89.00, 89.88 area. And so far, we've seen that we bounced off this back up to the 90.47 area. But this, once again, is a commodity currency, and we've seen small movements, and we saw this huge movement yesterday. There was a huge profit-taking day yesterday, and this all had to do with the fact that they came out and we had a budget deal here in the United States. So what took place was we had profit-taking even though gold went up. So the Aussie dollar showed weakness even though that gold went up, which was an aberration. Now, normally if gold is going up, you're going to see the Aussie dollar go up. Okay, that's a direct correlation. But we saw that it went down yesterday because people are getting prepared, because now they're saying, okay, we've got a budget deal in place. What are we going to tackle next? Well, the next rumor that's coming out is that they're going to be meeting next week, and that there's a possibility of a taper here for $10 billion, which would not surprise me, and they're trying to see how that would gauge the markets in slower markets here in the holidays. So I'm getting conflicting reports, and it's almost become laughable, because when we saw this 7.0 number for unemployment, that number is bogus in the fact, if you take everything into consideration. You've all read my stuff. You understand what that means about the real unemployment and what it really translates to as far as the number of people that are either off the unemployment rolls or have taken jobs, and they're more qualified for the jobs. And I use the analogy, can I take your order, please? And that's nothing against waiters. That's nothing against people that drive pizzas. Everybody has to have jobs. But when you've spent a tremendous amount of money getting educated, it's pretty sad that it's happening here in the United States under this scenario. So be patient of what's happening here. We've got one more big event, I think, before the end of the month, and that'll be what takes place with what the FOMC has to say next week. Otherwise, we should start to see range bound. Now, with the holidays next week, you're going to see from about the 20th on, from the end of next Friday till the 1st, you're going to have smaller amounts of people, volume into the markets, and there'll be a little bit more volatility. If you're a trader, if you're a scalper day trader, the next few weeks will be very profitable for you. If you're a swing position trader, you might have to look away from the euro, maybe from the US yen, maybe from the Swissy, maybe from the Aussie dollar, and start looking at some of these yen crosses or euro Aussies and some of the pairs that I showed you if you want to catch some movements now. That, in a nutshell, is what's happening under current market conditions. I want to thank you all for sending in the questions. If there's any other questions, I'll answer them right now. If not, we'll be cognizant of your time. And that'll be our last class here for the week. So if there's any questions, type them in. I'm taking a look at them. Otherwise, I'll go ahead and dismiss everybody here. Let me kind of get an update here. Oh, I was going to talk a little bit about what happened in the news. The retail sales came in, and it was supposed to be 0.6. It was 0.7. It really hadn't moved markets much. You also saw that the unemployment claims are up. They were expecting 320. It was at 368, not really a number. The Canadian New House Price Index was expected at 0.1. It was 0.1. What else was there? Was there anything else? I don't think that's... I think that's pretty much it. Okay, so retail sales is really not fantastic. It's really not anything bad about it. It's just that right now we're stuck in a quagmire, and we're getting ready, and it'll be really dependent on some of the big traders getting ready to take off and whether they're going to take some profit. I would look for some profit taking here in the euro here in the next few days, or at least next week. Okay. So I don't see any questions. So it looks like we've answered everything. If you want to go ahead and continue to send in those questions, send them in to support at 21stcenturyforextrader.com. Chuck has sent out an email. Brian sent out an email. Those of you that are expired here at the end of the month, we've given you a link to go ahead and resubscribe. We've also made you a special offer if you want to continue for the next 2 years. We appreciate each and every one of your business. From each one of us here at 21st Century, we want to wish you a Merry Christmas, Happy Holidays, and, get prepared to spend some quality time. We won't have much classes. Kirk and I might do an extra class after the 20th. We're talking about doing one extra class, but from after about the 20th, from that Friday, it's really precarious because you've got Christmas right in the middle of the week, okay? If Christmas was more towards the weekend, it'd be a little bit more feasible, but what's happened is it's stuck right in the middle of the week. So you're going to have Christmas on a Wednesday. You're going to have New Year's on a Wednesday, which means just everybody will be slow for the day before Christmas, the day after Christmas, and New Year's Eve, the day after New Year's Eve. And then when you take a look at that, it's actually a Monday and then a Friday. So I'll have a schedule at the end of next week for reports for the rest of the month all the way through non-farm payroll. Please mark down on your calendars, non-farm payroll is January 3rd. So you'll have New Year's Eve on Wednesday, and we will be back on that January 3rd for non-farm payroll. Okay? So I don't see any questions. We'll be cognizant of your time. Brian, let me go ahead and turn it back over to you. Or nope, Brian's already left. He's got some things that he has to do. So we appreciate each and every one of you. You guys have a blessed day, and I'll be back this afternoon with a report, and we'll talk to you all soon. Godspeed, and may the pips be with you. Talk to you soon.